Okay, looks like we are in. Hi everybody, welcome to today's session of UPSC Buffet by Gallant IAS. Today we will be discussing the 2023 economy questions from the PYQ. So let's get started. I really hope you have followed the previous sessions on 2021 and 2022. You might have gotten some insights from that, and you can see especially how those insights are really helpful in this 2023 approach, because 2023, as I always say, is a clear diversion or a deviation from the standard that UPSC has been going through 3 to 4 years ahead of that. But afterwards, in 2024, the trend has slightly been reversed. So we can expect something like 2023 in future, but mostly things will be in the lines of 2024 and 2025, most likely. So having an idea about 2023 really helps. But I recommend you not to make your preparation entirely based on 2023 model, just because it was one of the toughest and most unexpected sort of questions. Because even in the economy, most of the questions they were asking were mostly outlier questions, not from the fundamentals. That doesn't mean that in 2024 they have repeated the same. No, actually in 2024 the questions were more fundamental and more concept oriented. Same in the case in 2025. So 2023 questions in economy especially is slightly on the less conceptual sides, and it's mostly on the outlier side of things. But no issues, we can handle it, and stick through the course, and we'll be dealing with these questions. So welcome again. We'll start. So the first question is, which one of the following activities of Reserve Bank of India is considered to be part of sterilization? Okay, what is sterilization? Or first we need to know what is sterilization. Then only we can understand which among the following activities are part of sterilization. So if you have heard of sterilization, right away you'll get the answer. There is nothing you need to look for or anything, because sterilization is something that we often come across in economy when we are reading the part. But if you happen to miss that thing, then we have to rely on our usual logic and elimination. So from the name sterilization, it's meaning that protecting from germs or cleaning from germs or impurities, things like that. Sterilization on its with the meaning in economic terms, what could it mean? Maybe shielding from some impact or some effect, shielding something from some effect of something else. That's something we could decipher from the meaning itself. So conducting open market operation. Okay, open market operation. If you know what's open market operation, which you should know actually, there is no other way around it. It's basically buying and selling of government securities by the RBI. So that's open market operation. So basic purpose is to control the money supply and thereby inflation. So that's what open market operation means. So how does that has to do anything with sterilization? If you don't know what is sterilization, then it gets tricky, because all you could understand is like, okay, shielding something from something else. Okay, that's all we have got. Okay, no problem. We'll move ahead with the second option. It's oversight of settlement and payment systems. Okay, oversight of settlement and payment system seems probable. Maybe debt and cash management for central and state governments. How is debt and cash management for central and state government as part of sterilization? Like, what sort of protection is that? Basically, it's safekeeping. So there is no protection as such involved there, from as far as I know. Then regulating the functions of non-banking financial institutions. Okay, why non-banking financial institutions, but particularly related to sterilization? These two statements have got some issues, as in regulating the functions of non-banking financial, banking or banking and non-banking, that could be included if such a thing for protection or anything of that sort is there. These both could be included, but why not NBFCs in particular? This seems less probable. Debt and cash management for central and state government. Again, this is just management. How is this sterilization, like protection or something of that meaning is not there. Oversight of settlement and payment system. That seems like an action that is caution in nature, that is having a protective approach in nature. So that seems probable. Okay, so we can arrive at a 50-50 here. Conducting open market operation and oversight of settlement and payment system. So we need to know few things here. This is the maximum you could arrive. Actually, if you look at it, actually, this is the maximum you could arrive at without having any knowledge. Basically, sterilization means the RBI is trying to shield the Indian economy, or basically the money in the Indian economy, from the actions of forex exchange. Basically, if RBI is buying or selling dollars in the open market, the forex operations are being conducted. That will have an impact on money supply in domestic economy. So, in order to shield that, RBI conducts open market operations. Basically, I'll give an example. So the answer for this is open market operation, and the process sterilization is basically protecting the domestic market from the forex operations. So it's like RBI's action to neutralize the impact of foreign exchange market operation on domestic money supply. That's it. So that's all. That's basically it, sterilization. I'll explain it in detail so you'll understand. So RBI buys dollars. Okay, basically what? RBI is buying dollars. RBI doesn't buying the dollar. RBI is actually selling the dollars. Okay, when RBI buys dollar, okay, what happens? The dollars get more expensive. Actually, this is stopped. This is actually the reverse thing. Okay, so dollars come to India and rupee supply increases, and thereby risk of inflation. So when RBI buys dollars, there is a chance of increase in supply of rupee in the market, and this can cause inflation. So in order to counter that inflation, RBI do what? Just like we said, sell government securities. Selling government securities absorbs liquidity. Last day also we said, selling government securities meaning RBI is absorbing the liquidity from the market, and buying government security meaning RBI is taking the government securities and giving the bondholders the money, the security money, meaning pumping money. So by buying and selling of dollars, money, the rupee supply increase and decrease, and if it increases, RBI sells the government securities. If rupee supply decreases in the market, RBI buys the government securities. So that's basically it. So these are the kind of actions RBI take in order to sterilize the economy. Okay, basically to protect or neutralize the effect of forex market operations in the domestic market by means of lot of things, including open market operation. Open market operation means selling and buying of government securities. So that's it. Be very clear about this selling and buying of government security. You shouldn't have a doubt about it. It's like plain and simple. Selling means, okay, RBI is selling government security, taking the money from the economy. If RBI is buying the government security, RBI is giving the money, so pumping money into the economy. So that's it. Sterilization is somewhat a common topic. You shouldn't be missing that, but it's okay if you have missed that. But don't forget about open market operations, and also very important, operation twist. So just keep an eye on that. Operation twist. Simultaneous buying and selling of government securities. That's operation twist. So next one. How many of the above are included in capital markets? Okay. Again, this is reasonably a factual question, but if you can have an idea about few things, you will be able to eliminate some of the options. Okay. First one, government bond market. Okay. Call money market, then treasury bill market, then stock market. Okay. Basically, they are dealing with four different kind of, at least three different kinds of instruments. And if you could, find a similarity amongst these, you will be able to arrive at the answer. Okay. So, government bond and treasury bill. Okay. What are the similarities they are having? Government bond and treasury bills, they are both government bonds. But what's the difference? Government bond or G securities meaning they can have a maturity period more than a year. Whereas a treasury bill is having a maximum maturity period of less than a year. It could be 90, 180 or 360 accordingly. So basically there is an element of duration as well as the ownership, who is issuing that. So if you can analyze it on the lines of duration, we can say that these two are short-term instruments, while these two are long-term instruments. Okay. So short-term and long-term instruments are there. So if you could club them, that is, if one short-term is belonging to one market and another short-term belonging to another market, then we can obviously say that they both belong to one market, or we can eliminate the other two. So thereby we can actually do what? Eliminate eliminate any two. Even if we don't know the answer, we can be sure that these two can be clubbed. I've seen government bond market and stock market can be clubbed because of the duration. Same way, 2 and 3 can be clubbed. So even if we don't know the answer, we can be sure that these 4 cannot be there. So all 4 won't be there. Only 3 is not possible. Only 1 is also not possible. It could either be these 2 or these 2. So it's very logically we have arrived at an answer B. Just because we knew that the duration of these things have got a similarity. Some are short term, some are long term. Even though we don't know the answer, we can arrive at the answer. But capital market and money market are very core topics of economy. Never miss that. Okay. But somehow the options have been framed in this way, and there is a logic that you could apply like this with the duration, analyzing it on the basis of duration. It is not very advisable on these topics, at least. You need to be very, very clear. Okay. So the answer is 25B. I'll tell you what is capital market and money market. It's a very simple concept. You don't need to buy hard or anything. Money market meaning short-term funds, less than 1 year, and capital market is greater than 1 year. So just compare it. Okay, money market has got lower returns because it's less than a year and very less. The kind of coupons or everything, the coupon rate, everything is less compared to capital market. In capital market, proper economic action takes place. So consider, for example, equity shares. You can imagine how much the price varies or how much the risk they carry. So there are firms that could actually multiply their equity within a span of few years. So, and also there are stocks where their prices can crash 10 times. So anything could happen. So that's the capital market. The major component of capital market is equity shares. That is what we call a stock market. Then there are debentures. Debentures are unsecured loans, unsecured bonds. So then government securities, derivatives, futures and options, mutual funds, they are all part of this capital market. So basically the general financial instruments or the all sorts of debt and equity derivatives or everything belongs to the capital market. And be clear about things that belong to the money market and assume rest of the things to be belonging to capital market. I think that's easier way to study. Treasury bills, like I said, they have maturity period less than a year, ranging from 91, 182 and 364. 182 and 364. Then commercial papers, I'll explain what that is. Call or notice money, which is money at short call and notice, meaning immediate, banks can ask for money from other banks for immediately covering their balance sheet issues, mismatches and everything. That's basically overnight settlement, just for a night or a fortnight or 2 nights, something very short in nature. Cash management bill, same for state governments are issued, and I think central government is issuing those bills to state governments to cover their temporary mismatches, not permanent bonds or anything, not fundraising or anything. Temporary mismatches can be covered by cash management bills. So treasury bills, cash management bill, commercial paper. These are the main components of money market, and money market has less than 1 year of duration, maturity. And very important, regulator is RBI for money market and SEBI for capital market. Again, the money market, you can understand that we won't be retailers won't be investing much in market, but actually we can invest in government bonds. Usually it's a wholesale market. Large institutions are like banks or investors are actually part of the money market. But capital market is like retailers, just like us. We are investing our money in mutual funds, stocks, etc., and include other wholesalers also. So that's basically it. You need to understand the regulator. Money market regulated by RBI, while capital market is regulated by SEBI, and their duration 1 year, more than 1 year, and the basic components of money market, and assume rest of the things to be part of capital market. So money market includes treasury bills, cash management bills, commercial paper, money at short call and notice. So that's it. Then capital market, obviously equity, mutual funds, debentures, futures and options, things like that. So that's it. Moving on, next question. How many of the above are considered intangible investment? This is a very basic question. You don't need to know anything about it. All you need to know is the meaning of intangible. This is something you come across in various topics, I guess. Intangible and tangible and intangible assets, things like that. It's basic. So intangible meaning something that we cannot touch or feel, basically virtual or ideas, things like that. Okay, feelings, ideas, or those sort of things that we cannot actually see or touch, that's basically intangible. Tangible meaning things that we could see or touch, that's called tangible assets. So intangible assets and tangible assets, here they are asking intangible or tangible investments. The idea is the same only. What are the things that are intangible, things that cannot be touched or we cannot see actually, that are abstract or ideas or emotions or feeling. Brand recognition, branding, billboards, everything are tangible, but on the other hand, brand recognition is something more associated to our behavior, psychology and feelings, so it's definitely intangible, so that's there. Inventory, we all know what is inventory. Inventory meaning the raw materials, the semi-finished goods and the finished goods, actual goods. So that doesn't make it intangible, it's perfectly and it's properly tangible, so that's wrong. Intellectual property, again it's an idea, it may be written in paper or whatever format, but it's an idea, there is no final product for that. So intellectual property is also again intangible. And mailing list of clients, it's basically numbers and data, so it's again intangible investment. So it's basically 1, 3 and 4, all three, only 3. So inventory is not part of it, so that's how we arrive at the answer as 28C. So this is a fairly direct question. Things like this could be asked. Some people might have confused with this mailing list of clients, assuming it to be a paper or something of that sort. So don't confuse it. Anything that is digitally stored, like intellectual property is also like a digital solution. So things like that are intangible only. Okay. When it comes to things like inventory, where raw material, finished good, things like that are there, they are called tangible investments. Moving on. Then, very important one. But they have asked the question in a very simple format. 15th Finance Commission. Every year you need to know the terms of reference of Finance Commissions. Currently we are in the 15th Finance Commission, whose tenure is going to end in 2026, and 16th Finance Commission has been constituted and its terms of reference are yet to be properly released. But keep an eye on that. When 16th Finance Commission publishes their terms of reference, you need to be very clear. Terms of reference meaning how tax has to be, the net proceeds of tax has to be divided amongst the states. Okay, horizontal devolution, that is from center, about 41% of the net proceeds of tax is given to states, and the rest, that is about 59% rest with the center. And among this 41%, it is been divided between these 28 states and union territories based on some criterias, and that criterias are called terms of references. Every year they will have terms of reference. Every year as in every finance commission will have its own terms of references, and they have actually they keep on changing because they keep adding new things here and there. So keep an eye on that. Here actually this is very factual, but you could if you have heard about anything about finance commission, you could actually arrive at an answer, because recently there has been a push for accounting for demographic performance, because the states who do very well in terms of population are actually being at a state of disadvantage, because the population is a criteria in terms of reference, and those who are having good population control strategies are actually at a disadvantage because of their lower population numbers. So states with poor population control tend to get more reward, so it's like penalizing somebody for doing a good action. So demographic performance, there has been a push for inclusion of demographic performance into the terms of reference to counter the impact of population. So this should be there. This factually it's there. So if you have aware about that, you can actually choose this. Forest and ecology, that is there. Government reforms is not something that is there. Stable government, definitely not there. These two things are not there. If you have read about any terms of reference, things like this seems very improbable. The political structure, they don't care much about that, but tax and fiscal efforts has been included. Yeah, that is there. So answer is 1, 2 and 5, meaning only 3. 29B. I recommend you if you are writing 2026 prelims or 2027 prelims, or which year prelims, doesn't matter. keep an eye on the latest Finance Commission recommendation and its terms of reference. Okay, and be clear about the horizontal and vertical devolution. It's nothing complicated. Vertical devolution means between the center and the states. The lump sum is taken. One part is between center, one part is with the states. Then this particular part is being divided amongst the states based on terms of references. So that's it. So actually there was the vertical devolution, that is center state division was actually 42%. Later it has been reduced to 41% to account for the J&K bifurcation. So that is there. Earlier it was 42%. Then horizontal devolution. Basically there are the most important criteria is income distance. 45% of the sum is calculated based on income distance, and you need to know what is income distance. Income distance is the if you are considering a state, say for example Tamil Nadu, and you are accounting the per capita income of that state and a state having the highest per capita income. For example, if I remember correctly, Telangana is the state having the highest per capita income. It's 3 lakh per annum or something. So what is the per capita income of the state in consideration with the state having the highest per capita income? The difference is called the income distance, and based on that difference, that state will be given more more proceeds, more share from the tax proceeds. So how is this accounting? Because they are accounting it based on income distance, so that the income distance reduces due to these extra taxes given, or the extra efforts given, or extra money being given to the state for developmental purposes. The income distance will eventually reduce and uniform development is achieved across the nation. That is the idea behind this income distance, and that's why it is having about 45% of the share, or the determining factor of that share. Then area is there. Then population. Yeah, this is what I was saying. States having higher population will get more more tax. Some consider with states having lower population, mainly because of their good population control measures. To counter that, a 12.5% of demographic performance indicator is also being used to counter this. Okay, this is a latest addition. This was not there in 14th Finance Commission up until 2020. From 2020 onwards, the 15th Finance Commission has introduced this demographic performance. So keep that in mind. Also, forest cover was used in 14th Finance Commission, which is not here. But forest and ecology, not simply forest cover, but forest and ecology is the current term of reference. Be very clear. Okay, forest cover was used in 14th, which is no longer used. Currently we use forest and ecology. That's very important, and there is a share of 10%. So states having highest forest and ecology, that accounts for the organisms and ecosystem services, etc. This is a more broader concept than forest cover. So this is been included, and also tax and fiscal efforts have also been included, but the share is small. It's 2.5%. So it's 45% of income distance currently, and 15% of the area and population has got 15%, then 12.5% for demographic performance, 2.5% for the tax and fiscal efforts, and 10% for forest and ecology. Remember that, not forest cover, it's forest and ecology. Forest cover has been discontinued since 2020. So be very clear. Okay, moving on. This is a very logical sort of question, because we won't be dealing with any facts related to this. This is why this 2023 question paper is actually a tricky one, because most questions seems like something that we know, but we actually don't know. But if we can think straight, as in, most aspirants who used to clear, or most veterans who used to clear the prelims, had no issue clearing the 2023 one. I don't think many of them have had a difficulty. This is where having an acquired knowledge really help. So every year you put in the effort, even if you don't clear prelims, it doesn't matter. You need to have that knowledge, and you need to sort that knowledge in a way that it internalizes within you, so that you don't have to remember everything. And once you start clearing prelims, it will be a continuous format. You won't have an issue with that, and you just have to refurbish that knowledge and go through it. That's it. So it's all about keeping your head straight and going through the PYQs and understanding how questions are asked, not about what questions are asked for, or what exactly is being asked. It's about the idea. This is a perfect example of that. First is, India has more arable area than China. The greatest issue with this question is that there is no room for elimination. We need to know everything, so we need to take chances. So India has more arable area than China. Look at that. is it possible? China is a very large country. So even if we assume that it's entirely mountainous and there is very little arable area, but still China is a very large country compared to India. So it seems less likely. I'm not 100% sure, but it seems less likely. Proportion of irrigated area is more in India as compared to China. That is very true, because irrigation is something what irrigation is something India is actually topping. Okay, that means in India the irrigation, we have been exploiting our groundwater and everything just for what, growing crops, especially those water guzzling crops like wheat and rice. So India has got largest area of irrigated area, and that's exactly a reason why India's groundwater extraction is almost very high. It's highest in the world almost. I think there has been a question in 2024, I guess, about quarter of the world's groundwater has been extracted by India, and that too primarily for irrigation only. So this is very, very likely. Okay. Then average productivity per hectare in Indian agriculture is higher than that of China. This is another issue for the Indian agriculture. The productivity is low, despite the fact that we are having a very large area of irrigated area of farms. The productivity is low. So this is wrong. This seems less likely. So I am considering it as wrong, because China is a country with large base, and there is a good chance that they will be having more arable area or things like that. But irrigation is something that we often come across as a fact that India is one of the highest irrigated areas in the world. So this could be right. Okay, more than China, this could be right. So we have got government subsidies, government project schemes like PM Kusum, and all sorts of programs have been there, and the irrigated area is also very high. Though we are primarily monsoon dependent, we are being growing crops like wheat, rice, sugarcane, etc. Which are heavy water intensive, and water export is one of the major concern. So if you connect everything, we can say that the irrigated area is high. So it's like 4A, only one. So that's how we arrive at the answer. Moving on. This is something you don't usually study, okay, but you can easily eliminate it and arrive at the answer. And this is a carryover from 2022 question. There was a question in 2022 about investments in inflation index bonds. Okay, a question was there, and in that there was an option given us, the interest as well as principal that has been received on inflation index bonds are non-taxable. So you may think that see, this is how going through the PYQs will help, and I have given you the idea that none of the things, like majority of the things in India are not at all tax free. Okay, there are tax deductions for certain instruments like small saving schemes, and that too will have some sort of cap like 1.5 lakh per year. So things like that will be there. So basically everything within the tax rate is there, is like basically everything will be taxed, especially any sort of investment will be taxed, except for the small saving schemes. That too will have a ceiling limit. You need to have this idea, and 2022 the explicit question has been asked, and the key was there. So you will be aware, going through the PYQ, you will be aware that okay, taxing is basic in any sort of investment or whatever things, taxing is basic. So interest income from deposits in infrastructure investment trust, basically it's an investment. People are investing money in a investment trust, and distributed to their investors is exempted from the tax. How come that is possible? They're basically investing and making money, and government will charge you for making money. Basically that's income tax, and that's how government gets the revenue. So this is highly unlikely, going by the our current economic standards or our fiscal mode of operation. So this is very unlikely. So I can eliminate it, and since it's a statement based question, it's easy. It's D. I don't even have to read the other one, in which are recognized as borrowers under securitization and reconstruction of, that is SARFAESI Act. Maybe, I don't know, but I don't need to know, because this is very sure. I'm almost sure that anything, especially an investment, is exempted from tax, but the dividend is taxable. It seems very unlikely. Interest income, this seems very unlikely. So that's how I arrive at the answer. I think most aspirants who actually marked it right will be arriving at that answer because of the extreme nature as in this tax exemption nature. If at all this kind of question repeats, just be clear that just keep a note of things that are got tax exceptions, tax deductions, like agricultural income and small saving schemes, that too will have a cap. So just have an idea about tax exemptions, instruments, investments. There are not investments, I guess, instruments or income, and assume everything else will be taxed. Okay, that's how it works. Just go through the exceptions, like 4 or 5 will be there, and maximum, and assume the rest to be taxable. So you will be able to answer any question. So in the post-pandemic recent past, many central banks worldwide had carried out interest rate hikes. Okay, that's obvious. We have seen that because even in USA, in India, we have seen interest rates hike mainly because of this inflation. So that is there. Then that makes sense. That is true. Then central banks generally assume that they have the ability to counteract the rising consumer prices via monetary policy means. This is where this question actually gets tricky, because this is basic. Okay, central banks have the ability to control. I mean, they have the ability to counteract the rising consumer prices, obviously, because they handle the monetary side of things and the demand side of things, demand pull inflation. They have a control over demand pull inflation. So that is definitely there. But the framing of question can confuse some aspirants, because it's like central banks generally assume that they have the ability. They have actually tried to make this statement more general, but this could be read as, okay, there is something that they are expecting us, and this can lead to some overthinking. There is nothing like that. Basically, the question is talking about the general nature of central banks, and they have written the statement in such a way that it seems very general, not at all conclusive, very general. Because we know that central banks have the ability to counteract, but at the same time, whether they are successful in doing that or not is a question, because it depends not just on central banks alone. Various other policies matters. So that is there. But this is a very general statement, and this is what central banks usually do. In India, Monetary Policy Committee does the same way Federal Reserve does in USA. Same way anywhere. If there are inflation, there will be monetary measures to counter that. Of course, if there is inflation, there will be fiscal measures also to counter the supply side of things. So things like that will be there. Both of the statements makes perfect sense, and this could be a reason for this. As in, this is a reason for this, obviously. So 22A. That's how we arrive at the answer, 22A. Moving on. Next question. Okay. This one is slightly tricky. Actually, I got it wrong. So, because we usually come across statements like these, and if both of them seems right, you might think that, okay, that's the right statement. Like A will be the answer. But this is one area that went differently. But you don't have to, go for these exceptions. Like questions like these, or with answers like these are very rare. But just have an idea about that. Things could be like that also. So carbon markets are likely to be one of the most widespread tools in fight against climate change. This is very true, because carbon markets are really efficient tools, because they actually penalize the polluter as well as reward innovation, or reward those who are emitting less. So that's a very good tool. So that's one of the most widespread tool. Yeah, of course, we have been carbon trading and all sort of carbon certificates. Those sort of things have been very popular and are very effective in fight against climate change, because they economically incentivize reduction of emissions. So that's the thing. It's not like we are moral suasion or those sort of measures wouldn't work in long term. Economic incentives actually work, especially in a corporate setting where they are the actual emitters. So carbon markets actually works in fight against climate change. And from the reading of this statement, like carbon markets transfer resources from private sector to the states. This seems like probable, because they are trading the emissions certificates, things like that are being traded, and the resources in terms of money are being transferred from private sector to state, especially when it comes to emission reduction innovations. For example, some thermal power plants, or new and newer renewable energy technology, things like that are being developed by the private sector, and this could be transferred to state, especially under this carbon market mechanism, where reduction of emission is actually rewarded. So that could be true. These two make sense, and I went with A. But actually UPSC gave the key as B, because this is not the actual reason for carbon markets being the widespread tool. Then later on, of course, UPSC didn't give the actual answers, and I couldn't understand that. But I think this could be the reason, because carbon markets are one of the most efficient tools of climate change, fighting climate change, is because they reward innovation as well as penalize polluter, and the whole savings or emission reduction is brought into the ambit of economic incentives. So economic incentives can have a long-term impact and have a productive impact when it comes to anything including climate change. And since climate change and biggest emitters or polluters are the ones, large corporates and large industries, the economic incentive they will be having can push them to take the fight against the climate change. So that's there. And in the context of this, you have to read few things. CBAM, that is Carbon Border Adjustment Mechanism. Just go through what this is, because it's slightly important. It's a current affair. Basically, countries like regions like EU has got very tight carbon tax policy. As in, if the industry is polluting, it will be having a carbon tax, an additional penal tax over it, making that industry, for example, steel industry or maybe other industries that are polluting, will have a carbon tax. So their operating cost and their final product will have a higher rate due to their higher taxation, due to their higher emission. But in countries like India or other regions where there is no particular carbon tax, or they are not penalized, or they are not charged a penal tax or green tax, they would be having lesser price in comparison. So the markets where they are actually having tighter carbon emission regulations will have higher, have got reduced competitiveness, because their products will be pricier. But in case of countries like India, where there is no such tax, their products will be cheaper. So this creates a mismatch. Just because they are doing something good and they are at a disadvantage, it's kind of like favoring the one who is not doing the right thing. Okay, so in order to balance that out, they are, the products that are entering the EU border, that are from countries that have got no carbon taxes or things like that, will be added at the additional tariff in form of carbon border adjustment mechanism, so that the ones having higher emission standards are at par with those with lower emission standards in terms of price. So this is like to provide a level playing field for those controlling emissions, as well as provide a incentive for the other countries that have got higher emissions to reduce their emissions. So this is one thing. But India and many other countries have raised concerns about CBAM, saying that it's trade distorting and it's one-sided, and this seems like this goes against the principles of fair trade. Of course, these are valid arguments, but EU is based on environmental protection and their emission reduction goals, so that needs to be discussed, or that we need to see how it ends up. Similarly, India has introduced a new scheme like green credit scheme to incentivize afforestation or emission reduction measures. This can include afforestation or new technologies or reforestation, anything. So industries can get green credit when they do afforestation activities or conservation activities, and this is being managed by Indian Council of Forest Research and Education. This is very important. This is one organization or a body I have never come across. This is the first time I'm hearing that. Many of you might have heard about it, but I haven't. So keep this in mind. Okay, green credit scheme, and don't think that Ministry of Biotechnology or Ministry of Environment and Forest Change is managing it. No, it's not that. Or ICAR. Sometimes it will be given like Indian Council of Agriculture and Research. You might think that it could be right, but no. Be very clear that this is the agency behind green credit scheme, as in managing the green credit scheme. I also look for CBAM, how CBAM works, and if there are any other legislations in EU that is in line with the emission control. That's it. Then this is one question we have discussed earlier also. Small farmer, large field. Obviously, this is something you won't be coming across, but you can easily come to the answer based on elimination and sentence word deconstruction. Small farmer, large field, meaning less number of farmer with large field. Basically, land consolidation. That's the idea. I get it from the word itself. As in, small farmer with large field. Basically, there is less fragmentation and more consolidation happening. Okay. So maybe the idea is conveying about land consolidation, something in the line of land consolidation. we'll see the options. Okay, resettlement of large number of people uprooted from their countries due to war by giving them large cultivable land which they cultivate collectively and share their produce. Okay, it seems like, okay, small farmer, large field, but there is nothing mentioning about small farmer, just people are being rehabilitated. But why are they given, cultivable land and they cultivate collectively? This seems like a very not so likely scenario, very not very practical also. As in, why are we pushing some, people uprooted from wars? Like countries having wars have got different settings. Some will be having agrarian base, some won't be having agrarian base. So if we are actually giving them land and making them cultivate instead of investing in education or doing other sectors. Or I'm not saying that people shouldn't be doing agriculture, but it's not like everybody should be doing agriculture. There should be agriculture, there should be innovation, things like that should happen. So this seems like less probable. Okay, many marginal farmers in an area organize themselves into groups and synchronize and harmonize selected agriculture operation. This is somewhat in line with the small farmer large field. Basically, this is consolidation of land. But let's not jump into the answer right away. Let's go through the other options as well. Many marginal farmers in an area together make a contract with the corporate body and surrender their land to the corporate body for a fixed term for which the corporate body make a payment of agreed amount. This sounds somewhat like contract farming, and it is not like small farmer large field. Okay, somewhat like contract farming. I need to know. A company extends loans, technical knowledge and material inputs to a number of small farmers in an area so that they produce the agriculture commodity required by the company for its manufacturing. This makes sense. This is but this is contract farming actually. This is some form of contract farming. This is proper contract farming. So that's not small farmer large field. So this is a definition of a contract farming. So that's gone. This is also somewhat similar to this idea. So that is also gone. And this is definitely impractical. So that's gone. And this makes sense. And this is very much in line with land consolidation. So we arrive at the answer as B. You won't be studying this, but I assume that you get the approach. As in, we'll be going through the options. Do a litmus test based on practicality, then the similarity or the connection with the actual question word, and then the other one is like, are they giving definitions of any other phenomenon or any other situations? Basically, this is contract farming, so this is a definition of contract farming and not this. So you can have an idea like that also. Moving on, next question. According to Ministry of Micro, Small and Medium Enterprises Development, MSME Act 2006, the medium enterprises are those with investments in plant and machinery between 15 crore and 25 crore. All bank loans to my MSME enterprises qualify under priority sector. This is one area where you should be referring every year, because with every budget there is a chance for changing of definition of micro, small, medium enterprises based on inventory and investment in machinery and also turnover. So that is there. You cannot actually do any logic with this. This is proper fact. You can't do any logic in that. This is proper fact, and this fact needs to be updated every year, because I'm not saying that every year the definition changes, but it has been changing in quite a few times in the past. Like in the last 4 to 5 years, it has been changed at least thrice. So this year also, in 2025 also, the definition has been changed. The service and industries have been clubbed together, and also the upper limit and lower limit, like the limits for micro, small, medium enterprises have increased. Things like that have been done so as to improve the ease of doing business and to give a boost to the MSME sector. There is no logic for this. Just every year, whichever prelims you are writing, every year you have to go through the MSME classification. That is very important. A good chance that question could be asked, or something related to that will be asked. So go through the MSME classification in the economic survey or budget. It will be released during the budget only. And this is something often that can go wrong if you actually have a very non-nuanced approach towards question solving. All bank loans to micro, small and medium enterprises qualify under priority sector. Actually yes, but that's an extreme statement, assuming that okay, all bank loans, what could be all, things like that. But it's actually a right statement, because priority sector lending, extends to education loans, SCSTs, empowerment of those people, SCST, and then renewable energy, also MSMEs. So that is there, and keep an eye on those priority sector lending, priority sector lendings. Okay, which all sectors, if any new sector is being added. Okay, which all sectors. So keep an eye on that. Education loan also falls under this priority sector. This is like the mandatory, the loans that banks have to give if a particular request has been made and they qualify for the same. So this is the current status. Okay, so a micro enterprise and an enterprise or an industry that could be called micro if it's investment. Okay, the investment, they are making an investment up to 2.5 crore. It's less than or equal to 2.5 crore, then they are micro, or their annual turnover is less than 10 crore. Okay, so these are the two conditions that needs to be satisfied so that an enterprise is classified as micro. The thing is, those with those who are falling in micro will have some relaxations in terms of various regulations, and as well as labor standards and things like that. There will be a relaxed approach for micro compared to small, compared to medium. So that's why increasing the limit actually helps more and more enterprises to get the benefits of being under a particular category. So micro category will have some sort of advantages in relaxation compared to small, and small will have some sort of relaxation compared to medium, and the tax rate will be different, things like that, like relaxation in the form of taxation, various other clearances, things like that. So every enterprise, irrespective of their growth, will tend to be in a it's like an income tax slab. They try to be in one that is below their actual one. So government has actually identified that, and they just want to increase the limit. Earlier it was 1 crore, so it has been increased to 2.5 crore, and this, I guess, this was also 2.5 crore or something. You don't have to compare and learn. Just learn what the current stat is, because otherwise you might mark it wrong, and UPSC will be giving the older stat, and you might think that you have heard about this, and that could go wrong. So that is exactly why I didn't add the comparison between earlier and this year's, because it's confusing even for me. So just learn what's the current status. A micro enterprise that is having less than or equal to 2.5 crore investment in plant and machinery will be called micro, and their annual turnover should be less than 10 crore. Similarly, this is 25, just multiply with 10. Into 10 gives small, into 5 gives what? 5 times gives medium enterprise. Here also into 10, then 5. Okay, that's it. This is purely factual. Just learn it, and if there is any change, look for the budget and economic survey. If there are any changes, update it. Okay, with reference to central bank digital currencies, consider the following. It is possible to make payments in digital currency without using US dollar or SWIFT system. Yes, this is one of the major uses of central bank digital currencies, and this is one reason why countries like Iran, Russia are actually considering, and I think they have been using some sort of digital currency to bypass the US sanctions as well as the SWIFT system. So SWIFT is a payment system that's basically Western dominated system. Its headquarters in Belgium, in Brussels. So it actually facilitates payment between two banks. It's somewhat similar to NEFT, but not exactly, because it's an interbank transaction and it's an international form of transaction. You don't need to know much detail, but having an idea about SWIFT actually helps, because question could be asked, what's the technology behind SWIFT? So just have an idea about that, because this is often in news, because once a country is being sanctioned, it is kicked out of this SWIFT system, and that's why they cannot make or get payments through international transactions. Russia, Iran, North Korea, they are out of the SWIFT system, and that's how they are being sanctioned. So using digital currencies, this can be bypassed. Yes, that is true. Then a digital currency can be distributed with a condition programmed into it such as a time frame for spending it. This is true. This is especially true when it comes to direct benefit transfers using central bank digital currencies, because if in India, in order to ensure that the money reaches the right hands, A digital currency could be programmed in such a way that there should be a time frame, such as time frame for spending it. That's actually a good thing. And also this can be used for ensuring that speedy procedures happens, or to ensuring non-lapsability of funds, things like that. So this is also possible. These two make sense, and this is C. Yeah, that's true. Moving on, next question. In the context of finance, the term beta refers to. So most of you who don't know much about stock market trading, things like that, wouldn't have heard about this. There is a very less chance that you will be hearing about this. But those who have traded or did something with options and options or futures, they know that what beta means. But it's fine, even if you don't know, there is one trick to it. Because beta, we know that is it's a Greek. I think it's a Greek alphabet. Yeah, beta is a Greek alphabet. So meaning that usually beta, gamma, alpha, these are all variables we study in various subjects, and they represent something in general. What is like mu, Planck's constant, things like that. Everything is these Latin or Greek alphabets are often used to represent a value. That's the basic thing. In general, they are all used for things like that. So look for something that has got anything related to a numerical value or anything. This is exactly what is written here. This is the logic. This is the only logic you need to solve this, because these Greek or Latin alphabets are often used in equations, in chemistry, physics, whatever there is, in place of basically numerical values and nothing else. That's usually the thing. You just have to understand it's not beta, it's beta. That's it. So that's how you arrive at the answer. Okay, basic logic, common logic, but it's important that you make you keep your mind in such a way that these kind of logic comes to you in the actual examination. So this is how you can arrive at the answer. In reality, there are this alpha, beta, and there is called theta decay. This is the theta decay, meaning the price levels within which an option's price premium reduces, things like that. There are a few variables like that. I think there is alpha, then there is gamma, then there is theta, and then there is beta. Moving on. Then self-help groups. So SHG was originally initiated by State Bank of India by providing microcredit to financially deprived. If you have read anything about SHGs, you will know that State Bank of India has no role in that. So that would obviously be wrong. And then in an SHG, all members of a group take responsibility for a loan that an individual member takes. That's like joint liability groups. So regional rural banks and scheduled commercial banks support SHGs. Harmless statement. So this is true. This is true. This is wrong. We know that it is NABARD who is behind that. So it's only 2. So that will be the answer. That is NABARD in the 1980s actually started this SHG program. And I think it was, I think it originally started in Bangladesh, if I'm not wrong, under Muhammad Yunus. Then the reason why SHGs have become so successful in poverty alleviation is that there is a collective responsibility, that is joint liability group. It's collective responsibility, so that banks are willing to give loans to them, and they will be able to get credit, microcredit, and so they can start any venture or address their issues, financial problems. Also, they can be saved from predatory money lending and debt traps. That's how this SHGs and joint liability groups are working to alleviate or eradicate poverty. So that's it. Then moving on. So that's all about today's session. I hope you got the idea about these questions, and just like I said, 2023 is kind of an outlier sort of question. Just take some logic from these and don't go behind the actual questions that is being asked, because like questions like these beta and all are not really something that you can study. You could use some logic and arrive at the answer. Just trust your logic and build your logic so that you can face any sort of question, not just one that comes or one that you have studied. You should be going beyond what you have read and studied, and so that you can actually venture into attempting more questions like in the 90s range. So that gives you an advantage or increases your chance. If you are stuck at 80s and if you are struggling to go to 90s, improve your logic or approaches so that you can actually attempt more questions without fear. And keep your fears aside, and we'll be solving more questions in the coming weeks. So stay tuned, and we'll